Hi everybody. What a week, huh? What a week. What a month actually. Here is the ES from September 19 to present, and it hasn't even been a month, but 3 weeks of mayhem over over 1,000 Dow points, over 100 S&P points. In fact, incredibly, I was just looking at this. I'm recording this on Friday night, the 10th, and at 1 in the morning on the 9th, it was over 70 points higher. So the volatility has been picking up tremendously. In fact, I was just aching because yesterday I actually owned UVXY and I sold it yesterday morning for a small profit. It went up about 50% from where I sold it. There's just this is actually kind of the part of the market that I hate, and I hate it in a very loving way because it's great to have big fat profits every day. It's great to the bears are winning and the charts are working so well, but it's that snapback fear that we all live with, and I've got it bad. So much so that on Friday, I did later in the day try buying a few things, as I mentioned on the blog. I bought some energy items, XLE, ERX, XOP. All of them lost money, every one. So GDX. So every time I tried to catch the falling knife, it got cut. And I will say now what I said on Tasty Trade today, and I'm very sincere about this. This upcoming week, the market's either going to crash or rally. And as dumb as that sounds, that actually is divined from a lot of thought, and I'm quite serious about it. And those are two extremes, a crash. By crash I mean like October 19, 1987 type stuff. And by rally, I mean a multi-day, maybe even multi-week recovery. The Fed meeting, there's a couple of Fed meetings left this year. One of them, I think, is on October 29, and it's one of the little ones where they just come out with the announcement. They don't have a press conference or anything. And then there's one in December. If things keep unraveling this month, I suspect the Fed will try to save the day at their next meeting. I would be very surprised if they sort of fell all over themselves and even before their scheduled meeting tried to do something. You never know with this crowd, though. But what would kind of make sense would be some sort of like big mayhem / bottom, and then the Fed rushes in to save the day with QE5 or something, and so on. Now, if anybody has any special buttons that they can control the market, what I'll also say is I would greatly prefer a rally. Just like last Friday, I wanted a rally and got one. Because if it crashes, the party's kind of over for the bears for a long time because they will try to really save things. If we start the kind of a healing process, I assure you, having looked at the charts that I've looked at, it is going to be an even better bull trap than the one we just enjoyed. It's going to be phenomenal. So I'm torn. I did lighten up somewhat. I was like 170% margin. I'm down to like 120%. I've still got a ton of shorts. I got rid of the energy shorts that have been doing so well. And I'm kind of bracing for a crazy Monday. If things just like go into a free fall Monday morning, it might be kind of the last kind of gasp of this fall. Sort of like how my European trip ended in the same way, with like one last kind of whoosh downward, and then suddenly we start rocketing higher. So I'm mildly concerned. I almost said scared to pieces, but I'm not that scared because I think in the end it's all going to work out really, really well for the bears. But at the moment I am nervous. But setting my nerves aside, I have carefully selected a few items to look at, and let's check them out. And these are very general. Dow Jones Composite. This one, and these charts kind of fall into two camps. Some of them really speak loudly toward a bounce, firm support. This is one of them. We're approaching very major support here that goes back to March 2009. Um, Strangely, its most important component, the Dow Jones Industrial Average, has broken down. It broke its own major support initially way back in July 31, and even this gentler, kinder support here is broken too. And so this has just opened up for, nastiness. NASDAQ 100 NDX, this one likewise is kind of speaking to support. It's right on this trend line. In fact, it occurs to me this trend line is a little bit off. Let's fix that. That really belongs there. And that'll probably make it, yeah, it's got a teeny bit to go. But just eyeballing this, one could see one fine little whoosh to maybe equal this line, and then over a multi-week period, carving out a right shoulder of this pattern. And again, I hate this stuff. This is a drag. Waiting for, I love weeks like this week, but it's not like we're going to plunge to zero over the course of the next few weeks. There's going to be fight backs along the way, so we might have to endure something like that. And if we do, November could begin, a actually gargantuan fall, like a really meaty fall that will change the political landscape. But one step at a time. S&P 500, and here again we are right at almost to the point of the lowest levels we saw back in early August. And so here again, that's why I sort of say crash or recover, because crashing, if we cut through this line and cut through this line, it's going to be like mayhem. On the other hand, if we start to sort of slowly work our way back up, we could form the right shoulder of that potentially. Here's another chart which suggests support. This line goes back also to March 9, 2009. This is the EFA. It's kind of a global item here, and just beautiful tag. I pointed out this topping pattern a while ago, and we just went all the way down, lost about 8% or so. But the damage is really extensive, and that's why I say a recovery would be the greatest thing the bears could get, because it's just going to make setup after setup after setup. Here's the kind of damage I'm talking about. Here's the semiconductor index, completely shattered. Social media, SOCL. Here, we've got, I don't know why that shows green, but here we have this nasty slippage going on. I didn't plan to look at this. I was just curious what Bob was doing. Okay. Near a lifetime low on that. Well, it is a lifetime close, so virtually every single person's ever bought it's in the red. One item that I think is a fantastic hold for me on the short side is XHB, the home builders, because real estate has benefited, you would think it would benefit from the interest rates, which has just been plunging. Interest rates are probably going to start rising really soon, and that's going to just exacerbate the weakness in this area. So I've got a very big position in that. I would also point out that looking at, say, FAZ, for example, the triple bearish on financials, this is peaking above its own descending trend line. So the bears are really starting to take hold here. A different example of this is TWM, the Russell 2000. And so we've moved from 43 to 53 in this, but what is that, a 30% move just about? And you can see it bust out of this triangle pattern. I'm just going to keep throwing examples at you. TNA, this is the small cap triple bullish. Very severe breakdown here. And this is the kind of chart which makes me just say, bring on the bounce back, because this is a massive topping pattern. Any strength should be sold. Russell 2000, of course, which I've been obsessing over for the longest time. This has been glorious. Absolutely beautiful. And I'll just close with the VIX. I know you guys are all sick to death hearing me talk about this 22 business. And in case you missed it, even though this looks like I nailed it, this is false. We got damn close though. What was the high here? So this is the bogus one here, this data point. But we actually did get to 21.24, which is one of the reasons I'm thinking maybe we will get a final little poof on Monday, and I'll get my fabled 22 plus in the VIX. All right, well, it was a fantastic week. Rest up. It's going to be a very, very dynamic week ahead. Thanks for coming.